I moved to Puerto Rico last year. Can I prepare my own U.S. tax return? You'll find out on this episode of Taking Shelter. I'm your host, Peter Paulson. Viewer mail today. Josh from Atlanta writes, if I move to Puerto Rico and claim the tax incentives, can I still do my own U.S. tax return? Josh, you've made me curious, so I'm going to try it out myself. I assumed I moved to Puerto Rico last year, and I used readily available guidance to try to create a return I would be comfortable signing and filing. Let's start with an overview of the tax incentives that attract people to Puerto Rico. Act 60 is over 300 pages of lush tropical tax incentives. In particular, there is a small business incentive that can provide a 4% tax rate on a broad range of services provided to customers outside of Puerto Rico. There's also an investment incentive that can provide a zero tax rate on qualified investment income like capital gains accrued during Puerto Rican residence. That's the Puerto Rican side, and if you move to Puerto Rico, you'll need to file a Puerto Rican tax return. On the U.S. side, IRS Section 933 allows U.S. citizens who are bona fide residents of Puerto Rico, and there are about 3 million of them, to claim an exemption from U.S. tax on qualified income from Puerto Rico sources. Even if you take advantage of the tax incentives provided by Puerto Rico, you can still claim the exemption under U.S. Section 933 as long as you're a bona fide resident. There's no clawback. And the combination of these two provisions can be very alluring. Check out my prior videos for more information about the incentives and the bona fide residence and sourcing rules. I also have videos talking about efforts underway by the IRS and Puerto Rican authorities to ensure that all the conditions to claim the exemptions are satisfied. Okay, for this exercise, I'm pretending I relocated to Puerto Rico on April 1st of 2023. I've assumed I'm single with no dependents, and I have 3 simple income streams, which I'll talk about in a few minutes. I'm steering clear of business sales and crypto transactions because those can greatly complicate the analysis. I'm assuming I've been granted Puerto Rican incentives for both export services and investment activity, and I'm meeting all my obligations under the contracts so they won't be revoked, which is actually a thing. Furthermore, I've done everything necessary to qualify as a bona fide resident of Puerto Rico for the U.S. tax year 2023. In my hypothetical fact pattern, I can be treated as a bona fide resident of Puerto Rico for the entire year 2023 since I moved in the first 6 months of the year, and I assume I otherwise satisfy all of the residency tests through the rest of the year. I will note under the U.S. tax regulations, I need to continue my bona fide residency in Puerto Rico for the following 3 full calendar years in order to keep my 2023 year of move qualification. In the interest of time, I'm not going to talk about state and local income taxes, employment taxes, net investment income tax, Form 8898, or all the other forms that may or may not be required to be filed with the return, and other areas I don't specifically discuss here. So let's jump in. Whoa, I thought I could just jump into the numbers, but I realized that I first had to make 2 big determinations. Number 1, I created a Puerto Rico LLC to be my export services company, and I need to determine how I want to classify that company for U.S. tax purposes. My U.S. customers pay the LLC, and typically the LLC pays me a salary and distributes the residual profit as a tax-free dividend for Puerto Rican tax purposes. And by the way, if my customers are related, I need to do some transfer pricing. For U.S. tax purposes, I need to choose whether to classify that LLC as a C corporation, which is the default classification, or make an election to treat it as a pass-through entity. This is a decision that should not be taken lightly because Puerto Rican companies, C corporations, are treated as foreign corporations. And I've spent a lot of my career dealing with foreign corporate provisions, which can be extremely complicated and potentially costly. So this is something that really has to be analyzed in detail. But for this exercise, I'm going to elect pass-through treatment. And I think I'd do that in real life as well. And in order to make that election, I need to file Form 8832. That's not filed with the tax return. And I would want to file it within 75 days of forming my LLC in order to make it effective from the start of the existence of the LLC. I also need to attach it to my U.S. tax return for the 2023 year. As a side note, I need to satisfy the Corporate Transparency Act reporting requirements by the end of this year, 2024. So as a result of this election, for U.S. tax purposes, my LLC is treated as a disregarded entity since I'm the only owner. Puerto Rico changed its law in 2022 to conform to disregarded entity classification, and I would want to consider the Puerto Rican classification as part of the company's setup process. How I classify my export services company is a major determination. The other major determination I confronted is how I can avoid double taxation. In my fact pattern, some of my income can be taxed by both the U.S. and Puerto Rico. Fortunately, the U.S. and Puerto Rico have a tax coordination agreement designed to avoid double taxation. Under this agreement, I should be able to get a credit if both jurisdictions tax the same income. But how mechanically does this work? The IRS has issued two publications, numbers 570 and 1321, to help guide U.S. taxpayers with reporting Puerto Rico income. The guidance and examples in the publication are consistent with the general approach of the U.S. foreign tax rules of providing the U.S. with priority to tax U.S. source income. And the way that it works in practice is if the U.S. taxes U.S. source income and Puerto Rico also taxes U.S. source income, Puerto Rico needs to give a credit against its tax for the U.S. tax paid on that income, subject to whatever limitations exist in Puerto Rico, so there could be some leakage. On the flip side, the publications also provide examples of the U.S. allowing a credit for Puerto Rican taxes. And this is taxes on foreign Puerto Rican source income. These examples refer to U.S. government wages, which are not exempt under Section 933. And in my hypothetical case, all my Puerto Rico income is going to be exempt. So I don't anticipate the need to claim a U.S. foreign tax credit for any Puerto Rican taxes. That will greatly simplify my U.S. tax return, although I'll need to address the foreign tax credit on my Puerto Rico return. So after we get those two major determinations out of the way, let's look at my income items. It's been a good year. I have $550,000 of total income, comprised of three different sources. Number one, I assume that prior to my relocation to Puerto Rico, I had W-2 income, employment income, for the first 3 months of the year of a total of $100,000. Now, even though this income was received during my period of bona fide residence in Puerto Rico, all these services were performed outside of Puerto Rico and would not be eligible to be excluded under Section 933. Because this income was realized before I took up my residency in Puerto Rico, I don't believe it's going to be taxed in Puerto Rico, but I would want to confirm that with my Puerto Rico tax preparer and use the foreign tax credit offset if by some chance it is subject to Puerto Rico tax. Item two, income item two, for the last 9 months of the year, I received $300,000 of income through my export services company, and this would be self-employment income. During the last 9 months of 2023, I spent 20 days working in the U.S. and 130 days working in Puerto Rico. So based on a simple allocation of days to the total income, that means $40,000 of the business income is from U.S. sources and does not qualify to be excluded under Section 933. Since it's U.S. source income, I'll try to get a credit against Puerto Rican taxes for U.S. Tax paid on that income, subject to whatever limits there are in Puerto Rico. But I think my characterization issues involving the salary that I'm paying and my entity classification could make this a fairly complicated calculation. The third item of income I have is a capital gain. I assume I held publicly traded stock at the time of my relocation. I acquired the shares 3 years ago for $50,000 and sold them for $200,000 on November 1st, 2023 for a gain of $150,000. I only treat the post-move portion of the gain as Puerto Rico source excluded income under Section 933. The balance will be treated as U.S. source income and taxed in the U.S. Because my stock is publicly traded, I make the allocation between pre and post move based on the market price on the day my tax home shifts to Puerto Rico. That shifting of the tax home triggers the start of my possession holding period, at which time I establish a basis in the shares to determine how much gain can be excluded. In my hypothetical case, the market price on April 1st, 2023 was $150,000. I sold the shares later in the year for $200,000, and thus I exclude $50,000 under Section 933. The remaining gain of $100,000 is taxable on the U.S. return. To avoid double taxation, I will claim a foreign tax credit in Puerto Rico, subject to the limits and complexities of Puerto Rican rules. If instead of publicly traded shares, I had property subject to the allocation rules that did not have a evident market value, such as shares in a private company, I would have allocated gain between pre and post move periods based on the days in each period that I held the property. I want to point out that the application of these allocation rules is based on precise definitions in the code and regulations. Crypto investors in particular will want to take a close look at these rules. So, in summary, my U.S. taxable income is shaping up as follows. I am taxed on $240,000 of income in the U.S. attributable to my U.S. services and pre-move capital gains, and I'm able to exclude, in my case, under my hypothetical fact pattern, $310,000. I'll leave it to a future video to make all the calculations of the tax. If you want to see that video, hit the like button. I will need some software to do that because my income is a combination of ordinary income and capital gains. And I also need the software to calculate employment tax, net income tax, and the standard deduction or itemized deductions that are allowed after the scale back in proportion to my exempted income. And finally, I'd need to address, not necessarily finally, but I would need to address state income tax if that's relevant. But my goal here, the goal of this video, was to see if I could get comfortable filing my own U.S. tax return if I were to make this hypothetical move. So here's the verdict. Based on the simple income streams and assumptions I've made and the entity classification I chose, I believe I could find software in the market and create a return I would be comfortable signing and filing. But to be honest, it would not take much additional complexity for me to search for a preparer who has the software and the experience to be able to complete the return accurately. Using a qualified preparer might also help in the event I get audited and penalties are assessed. It would be optimal if I could find one person who could prepare both the U.S. and Puerto Rican returns to maximize the double tax relief. Josh, I hope this video has helped you find your best path forward. This has been Taking Shelter. I'm your host, Peter Paulson.